Here we're continuing on the closing entries PowerPoint. I'm going to review the couple of slides of the third step that we had finished up in the first part of the video. So we knew that there were 4 steps to closing. First step was to close revenues to income summary. The second step was to close expenses to income summary. So now, once we get done with those 2 steps, all our revenue accounts are 0, all of our expense accounts are 0 in the general ledger once we get done posting those 2. And we have numbers in the income summary account, and now step 3 is to close that account out and to take whatever balance is in there and move it to capital. So if there's a debit balance, we need to credit the income summary account to close it out to 0. If it's a credit balance that's sitting in there, we'll need to debit it to close it out to 0. And then we'll do the opposite to capital. Always make sure not to close the capital account. You are not going to look on the worksheet, find the capital account, and do the opposite of whatever's on there, which would close it out. You will not do that. That is a big no-no. So, how much is in the income summary account? Okay, a lot of times some companies don't have an income summary account set up in their chart of accounts. So, it's not necessarily posted in there. We don't know if it's a debit balance or a credit balance or how much it is. So we'll need to make a little T account for income summary and then put the credit amount that we did in step 1. We had credited income summary, we had debited the revenue account, and credited income summary. So we need to put that in our T account. And then we need to put the debit that we had in income summary from step 2 into our T account. Once our T account is filled up, then we foot and balance that T account. And then we'll know what we need to do to close the income summary account. Now in this slide we show our example that we had used in part 1. Back in the part 1 of the video, we had talked about step 1, we debited sales and credited income summary for 100. And so here I've created the income summary T account and I put the 100 on the credit side. And in part 1, for step 2, we had to close the expenses. So we credited all the expenses and we debited income summary, and that was debited for a total of 90. So I'm putting that 90 from that closing entry in the debit side of income summary T account. So now I have my debit and credit already posted to the T account, and I'm going to put a line across, big number minus a small number, and put it under the big number. So 100 minus 90 is 10, and I put that under the 100. So I now have a $10 credit balance in income summary. So to close it, I'm going to have to debit income summary the $10, which is circled on the debit side. Once I post that $10 debit, now my income summary will be 0. That's what I want. Then finally, I have to do whatever is opposite of what I did to income summary, I got to do to capital account. So I had to debit income summary to close it out, so I need to credit capital. If by chance my balance of income summary, instead of being on the credit side, was on the debit side, then I would need to credit income summary to close it. Then I would be doing the opposite. I would debit the capital account. So you have to have your income summary little t account so that you know what to do for this particular entry. So here's our journal entry. We're debiting income summary for the $10, and we're crediting capital for the $10. Again, our date would be the last date of that period. We have our explanation to close income summary to capital. You should note that since this $10 represents the revenues of 100 minus the expenses of 90, this $10 is net income. We are closing net income into the capital account. And so it should match what's on your worksheet or anywhere else on your income statement, financial statement, income statement. Should also be showing $10 as net income. Now we go on to the fourth step of closing, which is to close the drawing or owner withdrawal account into capital. We don't use the income summary account for this one. We just go straight to the capital account. So the owner's drawing account, as we know, has a debit balance. So if we want to close it, we'll need to do the opposite, which is credit. Then we'll do the opposite of that to the capital account. Okay, if I credit owner's drawing, I need to debit the capital account. Again, make sure you're not closing the capital account. We need to close down to zero the drawing account. And then just transfer that balance into capital. We're not closing the capital account. Okay, we'll use the amount for the drawing account from the balance sheet columns of the worksheet. So if the drawing account on the worksheet shows a debit balance of $6, I need to credit it to bring it down to zero. So I'm going to credit drawing the $6 and debit capital for the $6. Put my explanation to close drawing to capital, and I have my date, which would be the last day of the period. Once these four closing entries are made in the general journal, then of course I need, just like any other entry in the general journal, I need to post them to the general ledger. And when you do that, you need to make sure that every revenue account, such as sales, etc., is zero once you get done posting the closing entries. Every single expense account should be zero once you get done posting. And if you have an income summary account in your ledger, that should be zero by the time you get done. And the drawing account should be zero. The capital account, on the other hand, should end up being the same as the ending capital from your statement of owner's equity. Remember, we took on the statement of owner's equity, we took the beginning capital plus any owner's investment, which those two things together equal what's on the worksheet. Then we added net income, and we subtracted owner withdrawals. Well, that's what this closing just did. We transferred net income into capital, and we closed out, we subtracted the drawing account from capital. So now our ending capital balance in our general ledger should equal the ending capital on the statement of owner's equity. Okay, so once I've got all those posted and everything in the general ledger looks good, I will make a post-closing trial balance. Make sure you have a heading, such as ABC Company, post-closing trial balance. So we had our regular trial balances after posting our regular journal entries. Then we had our adjusted trial balance, which is after we post the adjustments. And now we have a post means after, post-closing trial balance after we post our closing entries. And of course, you need a date, just like any trial balance. What is the date? And it'd be the last date of that period. You're going to list, just like any trial balance, you're going to list all the accounts that have a balance along with their debit or credit balance. Since revenues and expenses and the drawing account are all closed, they don't have a balance. Their balance is zero. So they will not be on this trial balance. Only the accounts that actually have a balance will be listed. Okay? Now, in fact, even with QuickBooks or Sage 50, you can get on there and tell them, don't, I want a post-closing trial balance, but I don't want to list any accounts that have a zero. Some people want to see all the accounts even if they have a zero balance. Okay? All right. You want to make sure, once again, all the assets and liabilities will equal what's ever on the balance sheet columns of your worksheet. Okay? Because we haven't changed those. We haven't closed anything out of assets and liabilities. The capital account still has a balance, so it's listed, but the capital account balance is different than what it was on the worksheet, because now we've closed net income and we've closed out drawing account into that capital account. So now the capital account will have the same balance as ending capital on the statement of owner's equity. And that's what's going on this post-closing trial balance. All the assets and liabilities will be the same as on the balance sheet columns of the worksheet. If we didn't do a worksheet, they'll equal the same as in the adjusted trial balance or the same as on our balance sheet that we did. Okay? There's no changes to those. They'll be exactly the same. The capital account will be something that is different, and it now has the ending capital number in the post-closing trial balance, not the number that was on the worksheet. Finally, of course, just as in any trial balance, we total our debit and credit sides, and they should be equal. Now you are ready to start the next accounting period. So all of our revenue and expenses accounts are now zero. We're ready to start putting the next month's stuff in there. And our drawing account is zero. We're ready to start putting that in there. And our capital account now equals our ending capital of this period. And throughout the next accounting period, we'll just be posting any owner investments in there. And at the end of next month, we will close out next month's net income and drawing into the capital account.